Hey everybody, all right, so let's just take a look at review Thursday's price action for the ES and crude. So Thursday's ES basically went down at around 8:55. It tagged, what was it? Thursday's value, which was 445.16. So around here, it tagged it. Now the thing is, obviously you're not just gonna buy it, right? So it did this ding-donging over here, and then it rallied for 40 minutes and 46 ticks. So it goes to the prior day POC or value, and then it rallies. So when it rallies, it then pulls back, and then it just went up. But the key here is that you have a level. So what are the important levels? The levels are basically just support, resistance, and volume levels. There's nothing more to it. It's just levels. All right, levels are the price levels are breakout and test of the breakout. That's it. And the high and low, like daily highs and lows, weekly highs and lows. So it's just highs and lows, breakout, and these volume levels. It's nothing, and then you just need to see buying and selling from those levels, and that's it. All right, so it goes here, tags it, does all this shit, and then it rallies over here for 40 minutes. But more importantly, it's being confirmed, and this is what I really like, by market breadth. So when market breadth confirms it, intraday market breadth, that to me is that means the stocks, it's not just a shakeout or anything like that. The stocks themselves are going up. So that is, to me, that's confirmation. It's not, okay, the ES is going up or the NASDAQ is going up, but what's moving it? And this tells me that the stocks are moving it. That the stocks are moving up, and you see where it goes white, basically took out the prior highs. So this is not a bullshit move. It's less likely to be a bullshit move that'll go down because it's supported by market breadth. Anyway, so then it just continues your breakout. And also note, breakouts are, you never want to trade breakouts. What breakouts do, they could be a fake out. All right, so like fake out here, and then finally break out with some follow through. You must have follow through. Without follow through, the breakout is a fake out. Follow through is the determining factor that legitimizes a breakout. Okay. Anyway, where was I? So here, you have a break supported by market breadth, supported by the NASDAQ. 60 minutes of buying on the NASDAQ. So that's sustained buying, and that's very good. You want sustained buying over here, 40 minutes of sustained buying. I like it. All right. So it hits a level by, you could consider this a sign of strength. It's, here was the original breakout. Anyway, so it breaks out. Tests and goes. Now here's the important part is, when it starts moving sideways, I see this little, it's not a little, but it's a move, and goes red below this low. So typically it doesn't mean jack. But when the market breadth, shows me a lower low, and 185, which is more than the prior numbers, more than these two waves, that is a cause for concern. Because it means that sellers are selling. So after that, what happens? The ES basically does a fake out or a up thrust right here and goes down. and that's it. So, market breadth, I've said multiple times, I'm convinced on the daily chart there's no better indicator than market breadth, because I've seen too many turning points, and they were all caused by market breadth. Like, if I was trading on the daily, I'd be using the daily market breadth. Market breadth statistics, because they work again and again and again and again. You see them all the time. Anyway, so I said, you know what, let me try this intraday, but getting the right stuff and all of that data is a pain in the ass. So, but once it's done, it's done. So here you see the selling, and that was a leading indicator. The market breadth was better of a leading indicator than the NASDAQ. You see how the trend changed? It was a better leading indicator than the NASDAQ. So, and this is the market breadth on the NASDAQ. So even if you're trading the NASDAQ, you want to see its market breadth, and its market breadth is going down while the NASDAQ is going up. Why is the NASDAQ going up? It's not being supported by its components. So that's a problem. It means there's going to be a turn. Anyway, so that's the study on the E-mini. Let's go to oil. Oil had a beautiful move, and a lot of these other markets, one of the things you want to do is you want to have some highly correlated markets. So, for oil, that's one way to do it. You have the QRB and the heating oil, and the key here is that on this selling wave, which is pretty big, it's not just bullshit. Other markets are selling off also, and they break multiple lows. Bing, 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 bing. All of these are broken. And what I really like about it, I think this came from a level that was an upthrust, meaning the high here is 76.80, and the high here is 76.77. So this high upthrusted the prior rally high and then broke. So another principle or point to note is that rallies should come from springs or upthrusts. They have a better chance of working if they come from springs and upthrust. All right, it basically means that this upthrust, this high was rejected, and the market wants to go the other way. And this is sustained for 55 minutes, and the move is 78 ticks, which is bigger. 78 ticks is bigger than all of the prior down moves. So it was retested and puke. Here again, you could see that this change lasted. The buying was sustained for 35 minutes, and you see the other markets. This is the biggest wave, 65 minutes and 45 minutes. So chances of this being the change of behavior for short, thinking of getting out, if you don't have a position, thinking of getting in with the long, increases right here. Bingo. All right. Thank you. Bye.